I don't know about you, but as someone who's seeking more passive income by investing into dividend stocks, I am interested solely in the companies that can actually deliver not just over the month to month or year to year, but decade after decade. After all, that's the true power of passive income. Now, once I tweaked my dividend investing strategy, implementing this one little tweak, my account has not stopped soaring to higher highs. And now I'm not only going to share my secrets with you, but I'm sharing a few stock ideas that go hand in hand with this profit generating strategy. Ready? So I've been investing in the stock market now for just over a decade. And admittedly, the investor that sits before you today is not the investor, thank God, of a decade ago. I was not only terrified of losing money back then, but I failed to truly recognize the sheer power of simply having time in the market. Where I am today, because of my, I'll say, fragility, is playing a serious game of catch up. Now, my journey started with a Vanguard fund that you can't really lose with. It was the Vanguard Total Stock Market Fund, ticker symbol VTSAX, which is really just betting on the entire market. I mean, we can click into the fund here to see that it's for investors looking for a low-cost way to gain broad market exposure in the US stock market, which ultimately means an investment into a basket of over 3,600 stocks, with the top 10 coming down to Apple and Microsoft, Nvidia, Amazon, Meta, Google, and Berkshire Hathaway, Broadcom, as well as Eli Lilly, with most of the exposure here in tech coming in at 33.6% of the fund's weight before it taps into industrials at 12.6%, healthcare at 11.5%, financials at 11.2%, and spreading across all the other sectors. Now, as you could see, I really wasn't willing to take really big risks. That just wasn't me. However, I eventually stumbled across some of you fine folks in the dividend investing community, and I thought, wow, how cool would it be to invest in a company and get dividends? This is a piece of cake. I mean, I buy a share or become an owner of a company, and the company then shells out a dividend, and that's just passive income, and it's magic. It cannot get any better. So I was off building a dividend income portfolio. Of course, stocks like Verizon, AT&T were a must, likewise with the 3Ms of the world. Then the classics like Coca-Cola, Procter & Gamble, Pepsi, Johnson & Johnson, and all the alike. And before I knew it, well, thanks to 2020 and Corona, discounts were everywhere, and I amassed a dividend portfolio of well over 45 to 50 holdings. And this was one of my biggest mistakes. But I'm not here to actually talk about portfolio size. That's a different video altogether. I am here to talk about the minor tweak in my dividend investing strategy that changed everything. Now, it all came down to adding one word in between dividend and stocks, which is growth, capital G. Because the Verizons, 3Ms, and AT&Ts of the world may come in strong with a hefty dividend yield, but their share prices are either stagnant or on the decline, which as an investor with time to spare in the market is not what I want, not what I need either. I actually want to avoid them entirely. And investing in companies with long dividend growth history means that we would be investing in great businesses that have shown strength to survive and increase their dividend payments, even during tough economic times. Of course, the cash that a company generates is what they use to pay and grow the dividend. So a growing dividend means that the company itself is generating more and more cash. Now, my goal is to increase my passive income over time, so by the time that I retire, it's big enough to live off of and still increasing. Therefore, I want to put my money in companies that keep on giving me cash while continuing to grow their own cash pile itself to feed the machine. Are you seeing what this whole deal is all about now? Let's just go ahead and get an example going here for ourselves. Let's take a company yielding a 3% dividend per year. This means for every $10,000 invested, $300 per year is paid out in a dividend. That doesn't sound like a lot initially, but remember, we're focused on dividend growth companies, which pay consistent increasing dividends, providing growing income to investors over the years. Let's say the 3% yielding company grows its dividend by 7% per year. This move ultimately then increases the investor's income over the long run. That $10,000 initial investment in 15 years would pay a dividend of $774 if the dividend growth remained constant at 7%. And if dividends were reinvested, the amount received in year 15 would be $1,139. Now, if you keep reinvesting your dividends, which all of us should be doing, there is a second lever of income growth working for us in our favor. This will grow the dividend income exponentially faster. Visually speaking, a $5,000 yearly dividend payment increases to $7,500 $163 by year 15 through dividend raises alone. On the yellow line there, dividends are reinvested back into the dividend paying shares, and we can see that from that yellow line, the initial $5K investment actually increases now to a whopping $14,686 by year 15. So if you have time to actually enjoy the fruits that the market bears, my recommendation is simply to table the Verizons, AT&Ts, and 3Ms of the world and all those slow growth players. Focus as much as you can on dividend growth if you're a long-term investor. Now, here's where I want to come in strong with 3 powerful dividend stocks with you so you don't have to do the heavy lifting. The first dividend growth stock that I personally am very bullish on and invested into is Visa, ticker symbol V. This is a company that you all use daily, if not weekly, as Visa is a facilitator of transactions and generates its revenues with every swipe of your credit card with various merchants. Honestly, I'm in love with the business model as it pushes all the real risk of lending money to the banks while profiting from end-to-end technology. Now, Visa also meets my fundamental check when it comes to income in the balance sheet, as we can see how year over year here within the last 5 years, it's been increasing revenue with over $32 billion brought in 2023. Now, just think about for a moment here everything that's been going on over the last few years, and Visa has been crushing it. And just clicking into the balance sheet, almost insanely clean, keeping their assets way above their liabilities year over year. Now, scroll back up with me. We can examine their stock chart to see plenty of greenery, both in the near term and over the long term. As we can see, year to date, we're up by over 10%. Over the last 5 years, up by over 60%. Max view here, over 1,000% worth of appreciation. But we're here to talk about Visa's dividend growth. So jumping into Simply Safe Dividends, we're going to see that this small yield of 0.73% is small but mighty, because we're talking about a growth rate coming in at a whopping 18%, and it even comes with a 15-year dividend track record. Now, investors, I have 2 more dividend growth whales for you. But before I actually cover them, there's roughly 75% of you out there who keep checking into the channel and coming back for more insights and ideas but aren't subscribed. And I'm just going to let you know outright right now, I officially quit my corporate job, and I'm now focused on this channel to produce content like this every single week, hopefully eventually daily. So I want you to subscribe to the channel to tell me I made the right decision. And also let me know that this is actually a video you're getting value from by simply tapping on that thumbs up button. It goes a heck of a long way. With that, back to it here with the low-key power player with Amphenol, ticker symbol APH, which is a producer of electronic and fiber optic connectors, cables, and connection systems. Heck, I can't really speak in depth to their technology, but I can speak to the fact that their service is a necessity, and at least at the macro level, something I can understand enough so that it's going to continue to be around for decades to come into our future. And similarly to Visa, an income-producing machine year over year with revenue topping new highs each year while keeping to a clean balance sheet worth of their assets to liabilities. So scrolling back up here, we're going to see that it's actually up over 25% on the year, though we can actually see it's down right now from highs not too long ago, maybe an opportunity. But 5 years out, we could see over 156% worth of growth and getting a max view here to get over 43,000% worth of appreciation. Now, dividend-wise, very similar to Visa. Amphenol's coming in with a 1.09% dividend yield. So again, small but mighty, 18 years worth of a dividend track record there, with some more growth coming in at an average of 19% year over year. Next up, I want to talk about Rollins, ticker symbol ROL, which is actually a stock that only very recently have I really begun to track. It's a pest control company operating on a global scale through subsidiaries that I'm sure you've heard of, like Orchid, PCO Services, Home Team Pest Defense, just to name a few. But when I think about Rollins, I weigh the probability of termites, roaches, and rodents, as well as insects, leaving us the heck alone, and I can't really see that happening anytime soon. So we're gonna need pest control services. So Rollins serves over 2.8 million customers just in the USA alone, with roughly 92% of their net sales deriving from the States. And that all just tells me that it's got a pretty sizable moat that's actually protecting the revenue and cash flow. Now, speaking of revenue and cash flow, here we are with a solid year-over-year track record worth of profitability, not quite up at the levels of some of our other mentions here today, but nonetheless growing in the billions, all while their balance sheet passes my cleanliness check once again here with a healthy assets to liability ratio. And scrolling back on up, Rollins is soaring high up on the year here, over 20%, up by over 122% in the last 5 years, and clicking for this max view, over 14,000% worth of appreciation. Truly a silent killer when it comes to knocking other dividend stocks off my watch list these days, especially now with a solid 1.17% dividend yield. Again, small but mighty 19% year-over-year growth there for the last 20 years, and a dividend growth streak now just beginning over the last 3 years. Now, investors, dividend growth over a high yield, at least for me, at least at this point in my journey. But now I want to collect your thoughts on this matter, and I want to understand what you're most focused on, growth or yield, and what is your ideal dividend range. Drop your thoughts down there in the comments. Be sure to join me on the journey by subscribing, and of course, for your convenience, just click right here, right now for more insights.